Gold is rallying. The precious metal is experiencing a significant surge in value, capturing the attention of investors worldwide. Prices are surging as investors seek safety. In times of economic instability, gold is often seen as a safe haven, a reliable store of value when other assets are volatile. The US election is a key driver. Its outcome is uncertain. Political events, especially those as significant as a presidential election, can create a lot of uncertainty in the markets. The Federal Reserve adds to the uncertainty. Their policies and decisions have a profound impact on the economy, influencing everything from interest rates to inflation. A rate cut is expected. This weakens the dollar. When the Federal Reserve cuts interest rates, it often leads to a depreciation of the dollar, making gold more attractive. Gold benefits from dollar weakness. As the value of the dollar declines, gold prices typically rise, providing a hedge against currency devaluation. Investors see gold as a haven. In uncertain times, they turn to gold to protect their wealth, ensuring their assets are secure. It preserves wealth during turbulent times. Gold's stability and enduring value make it a preferred choice for those looking to safeguard their financial future. Gold has a long history. For thousands of years, civilizations have valued gold for its beauty, rarity, and utility. It has been a store of value for millennia. From ancient empires to modern economies, gold has consistently been a symbol of wealth and stability. It is a tangible asset. Unlike stocks or bonds, gold is a physical commodity that you can hold in your hand, providing a sense of security. It is not subject to the whims of central banks. Gold's value is not directly influenced by the policies of any single institution, making it a more stable investment. This makes it attractive during times of economic and political stress. When uncertainty looms, gold shines as a beacon of stability, offering reassurance to investors. The 2024 US election is highly contested. The race between Kamala Harris and Donald Trump is tight. This creates uncertainty. Investors dislike uncertainty. It makes them nervous. They turn to safe haven assets. Gold is a classic safe haven asset. It benefits from uncertainty. The closer the election, the higher the demand for gold. This demand pushes prices higher. A contested election would further boost gold. The Federal Reserve is expected to cut rates. This is to stimulate the economy. Lower rates make borrowing cheaper. It encourages spending and investment. However, rate cuts can also weaken the dollar. A weaker dollar makes gold cheaper for foreign buyers. This increases demand. Gold is priced in US dollars. A rate cut could therefore boost gold prices. Investors are watching the Fed closely. Their actions will impact gold's trajectory. The election outcome will impact gold. A Harris victory could lead to higher taxes and more regulation. This could stifle economic growth. It might boost gold as a safe haven. A Trump victory could lead to more fiscal stimulus. This could boost economic growth. However, it could also increase inflation. Gold is seen as an inflation hedge. It might benefit from a Trump victory as well. Section 5. Deciphering the technical signals. A look at key indicators. In this section, we will delve into the critical indicators that help us understand market movements and make informed decisions. These indicators are essential tools for traders and investors alike. Technical analysis supports gold's bullish outlook. This means that based on historical price data and various technical indicators, the market sentiment for gold is positive. Investors are optimistic about gold's future performance. The Relative Strength Index, or RSI, is above 70. The RSI is a momentum oscillator that measures the speed and change of price movements. When the RSI is above 70, it typically indicates that the asset is overbought. This indicates the market is overbought. An overbought condition suggests that the asset may be due for a correction or pullback, as it has been bought extensively over a short period. However, strong trends can continue for extended periods. Even in an overbought condition, a strong upward trend can persist, driven by continued investor confidence and external factors such as economic data or geopolitical events. Key support levels are $2,700 and $2,650. Support levels are price points where an asset tends to find buying interest, preventing the price from falling further. A break below these levels would be bearish. If the price falls below these support levels, it could signal a shift in market sentiment from bullish to bearish, indicating potential further declines. Resistance is at $2,800. Resistance levels are price points where selling interest tends to emerge, preventing the price from rising further. A break above this level would signal further upside. If the price breaks above the resistance level, it could indicate a continuation of the bullish trend, suggesting that the asset has the potential for further gains. Section 6. Investor sentiment, gauging the mood in the golden arena. Investor sentiment towards gold is bullish. This is evident in the rising demand for gold ETFs. Central banks are also buying gold. They are diversifying their reserves away from the US dollar. This bullish sentiment is likely to continue. The election uncertainty and Fed rate cuts are supportive factors. A break above $2,800 would further fuel the bullish sentiment. Section 7. Beyond the election, long-term economic drivers of gold. The US election is a short-term driver of gold. Long-term drivers are also bullish. These include rising government debt, geopolitical uncertainty, and inflation expectations. Gold has historically performed well during periods of high debt and inflation. It is a store of value that protects wealth. These factors are likely to support gold prices in the years to come. Section 8. Gold in a diversified portfolio, a hedge against volatility. Gold is an important part of a diversified portfolio. It acts as a stabilizing force, especially during times of economic uncertainty and market turbulence. It provides a hedge against volatility. When markets are unpredictable, gold often retains its value or even appreciates, offering a safe haven for investors. It has a low correlation to stocks and bonds. This means that when the stock market is down, gold prices may not be affected in the same way, providing balance to your investments. This means it can perform well when other assets are struggling. Historically, gold has shown resilience during financial crises, making it a reliable component of a diversified portfolio. Investors should consider allocating a portion of their portfolio to gold. The exact percentage can vary, but many financial experts recommend between 5% to 10% of the total portfolio. The amount will depend on their risk tolerance and investment goals. Those with a lower risk tolerance might allocate more to gold, while those seeking higher returns might allocate less. Gold can help preserve wealth and reduce overall portfolio risk. By including gold, investors can protect their assets from inflation and currency fluctuations, ensuring long-term financial stability. Section 9. Conclusion. Navigating the golden path in turbulent times. Gold is shining bright in uncertain times. The US election and Fed rate cuts are driving prices higher. Investor sentiment is bullish. Long-term economic drivers are supportive. Gold is a valuable asset in a diversified portfolio. It provides a hedge against volatility and preserves wealth. Investors should consider adding gold to their portfolios. It is a safe haven in turbulent times.